Hello and thank you for joining us today for what we hope will be the first of our quarterly briefings on the shopper confidence of UK consumers. I'm Paul Langston. I head up our retail location strategy team here at CACI. Please join in and post your questions and comments in the boxes as we go along, and I'll do my best to answer them. Here's the agenda that we're going to go through today. After a brief introduction, we'll look at the headline trend in shopper confidence, and then we're going to drill into it in more detail at Acorn category and look at significant brands and places that are likely to be affected by the trends we've seen before I wrap up with some short conclusions. So by way of introduction, we've been working with our friends at the British Population Survey, or the BPS, for 5 years now to track shopper confidence on a monthly basis. We've had our comments published in various media, but we thought we'd like to share this in a more interactive format with you today. Now, the key difference in our approach to monitoring confidence is that, yes, whilst headline shopper confidence trends are interesting, and we're going to start there in a moment, our Acorn classification enables us to look at the trends below the headline rate and look at how different consumer groups are thinking, and we can then look at their shopper behaviours and the brands and places affected by them. So let's start with that long-term trend, which dates back 5 years to January 2010. It is based on the BPS asking a large and demographically stratified sample the same question each month. That question is, thinking about your financial situation at present, how do you think it is likely to have changed, if at all, in 3 months' time? Now, respondents are asked whether they expect things to be the same, get better, or worse. We then look at the net difference between those saying better versus worse and track this as a positive or a negative percentage. Here is that long-term trend. And whilst the question is simple, it showed remarkably valuable results that have reflected consumer behaviour over this period. As you can see, it's been a long and bumpy road with many false starts to the economy's recovery. The general election in 2010 saw the start of a decline in confidence and implies that some had thought it would bring a new dawn, and we'll come back to that at the end of the webinar. 2010 and 2011 Christmases were a bad time both for consumers and for retailers. Our sentiments were at their lowest in the last quarter of 2011, which served to predict the economy reaching its lowest ebb in the first 2 quarters of 2012. This was the time when it was initially thought that we'd entered a double-dip recession. As consumers, we started to feel good about life in August 2012 at the Olympics, and then we worried that we'd spent a bit too much and everyone was nervous going into Christmas 2012. But it was nowhere near as bad as everyone had feared, and for the first time since our record started in 2010, we actually scraped positive +1 sentiments at Christmas. Things started to really pick up in summer 2013, and then we feared we'd overspent and started to worry about Christmas, and there were also fears of interest rate rises and a new housing bubble. But Christmas 2013 ended up almost universally positive for retailers, and clearly consumers were feeling more positive, and the recovery really seemed to take hold in spring and summer 2014. We then saw what we're starting to see as a bit of an annual trend, the post-summer or pre-Christmas dip in shopper confidence in the latter quarters of 2014. As we now have this 5-year trend, we are hopeful that we can start to use such movements as possible barometers of future trends and see what's going to happen before it becomes too late. Now, that has set the initial context. Let's spend the next few slides focusing on these more recent months' worth of movements. This slide now is a zoom in on the last 12-month period of that previous slide. The positive news here is that in the last 12 months of the year, shopper confidence rose by over a percentage point to +8.7% in December, breaking the end-of-year decline of 4 months of falling confidence. As I already said, this decline in confidence in the last few months in the run-up to Christmas is a trend that's been witnessed in all but one of the 5 years that we've been monitoring shopper confidence. And it seems it is logical that consumers get nervous about their Christmas spending commitments and leave behind their more relaxed summer spending habits that we saw that gave rise to this peak. The fact that the trend at the end of the year in December was so strongly reversed is likely to be reflected in strong trading in the run-up to Christmas from Black Friday to Christmas Eve, and it seems to have been reflected in most of the early retail figures published so far this month. The cause of this last month's boost in shopper confidence may well have been driven by the availability of good deals in many retailers during December, but also reflects the fact that there were no major shocks in the UK economy or policy announcements in December. More positives The fact that we ended 2014 almost 5 percentage points higher than the plus 4% at the end of 2013 here should give retailers confidence heading into 2015. It also reflects the view of the British Retail Consortium survey published in the Retail Week on 2nd of January that 76% of retailers expect their sales to improve in 2015 compared to 2014. So that's the headline trend. Now let's look behind that at what's been going on for the 5 Acorn categories. As many of you will know, we classify every consumer in the UK into 5 broad Acorn categories, generally declining in affluence from left to right within each of these 6-month bars, and reflected in names ranging from affluent achievers through to urban adversity. Please see our website if you want to know the vast amounts of detail we know about each of these Acorn types. Now this chart shows that behind the headline trend, 3 Acorn categories saw an increase in shopper confidence in December and 2 saw a decrease, with the same trend happening over the quarter as a whole. So let's discuss these in turn, starting with the positives and the categories with the growing confidence. The largest growth in confidence in December was the 3 percentage point increase in the comfortable communities Acorn category, shown by the green bars. This category ended the year at the same level as the first month of the quarter at plus 9% and has shown remarkable stability over the 6 months shown here. Additionally, confidence is up a significant 5 percentage points on the end of 2013, when comfortable communities ended the year with a 1-point drop in December 2013. The fact that comfortable communities are the largest Acorn category in the UK, representing much of the middle ground, makes this stability in shopper confidence all the more encouraging for UK retailers. And for this reason, they represent what I'm calling the key Acorn category this quarter, and I'll drill into them in more detail in a minute. But let's quickly look at the other categories. Firstly, the 2 showing an increase in confidence over the last month and quarter. Firstly, affluent achievers, the left-hand set of bars, the UK's most wealthy consumers. They've seen a negligible increase of less than 1 percentage point over the quarter as a whole. However, a note of caution here. This category of highest spenders has actually dropped 5 percentage points since its high of 9% in July, and is now only 2.5% higher than it was at the end of 2013. This drop at the end of the year is almost identical to that seen in the same period in 2013, and we will continue to monitor this Acorn group closely because they contain most of the key business leaders in the country, and we should be wary if this 6 month drop is not reversed in the same way as it was in 2013 or 2014, sorry. On a more positive note, the financially stretched Acorn category, shown in orange on this chart, has reversed half of the drop in confidence that we reported on in the previous quarter. A 2 percentage point increase in confidence in December brings this category back up to a level of plus 8.5% here, more than 5 percentage points higher than the year-end 2013. This reversal of the declining trend that we saw in the previous quarter may support our view that this financially vulnerable category were disproportionately alarmed by the uncertainty relating to the Scottish referendum, which was in full swing in the previous quarter's data. Now let's look at the Acorn categories with declining confidence. The 3 percentage point decline in December in the confidence of the rising prosperity Acorn category, the dark blue bars here, is the most marked drop over the quarter. However, this does not look like a major concern, as this category remains at plus 15%, by some distance the most confident of all Acorn categories, and is almost 10 percentage points higher than at the same time last year. And finally, the less than 1 percentage point decline over the quarter in the urban adversity category, the right-hand bars, is also just too small to be seen as a major concern, and this category is also more than 2 percentage points ahead of December 2013. So, in summary from these last few slides, it's a mostly positive story, although we do have a couple of warning signs that we need to keep monitoring moving forward. Each of these 5 broad Acorn categories is split to give us more detail at our 17 Acorn groups, which drill further down into 50 detailed types. Don't worry, I'm not going to go into each of these. I'm just going to spend a few slides now drilling into the patterns within what I have flagged just now as this quarter's key Acorn category, the comfortable communities. So, if we break down the key comfortable Acorn communities, a key comfortable communities Acorn category into its 5 constituent Acorn groups, we see the following over the last quarter. Firstly, we see successful suburbs. The second set of bars here have seen the most significant increase in confidence, rising 7 percentage points from +9% to +16% over the quarter. This is the highest level of confidence ever seen since our records began in January 2010 by the successful suburbs Acorn group that make up just over 6% of the UK population. And it's worth pointing out they were on 0 confidence just 12 months ago at the end of 2013. Because of the size of this group and the sizable movement, I've defined successful suburbs as this quarter's key Acorn group, and again, we'll look at them in a bit more detail in a minute. But first, let's look at the behaviours of the other groups within the comfortable communities category. Firstly, steady neighbourhoods, the middle bar. They have also reached their highest level since records began, climbing 4 percentage points over the quarter to end at +11%. And like successful suburbs, this large group, representing a sizable just over 8% of the UK population, also rose from 0 in December 2013, again reinforcing this very considerable growth in shopper confidence at the heart of Middle Britain. The next group is comfortable seniors, the 4th set of bars. This small Acorn group, representing just 2.5% of the UK population, tends to see volatile movements in shopper confidence, probably due to the relatively small number of survey respondents. And despite this short-term volatility that briefly saw this as the only one of the 17 Acorn groups to drop into negative confidence territory during October, they have ended the year as a strong positive +8%, and this is just 1 percentage point below their year high and consistent with the stable level they held in the spring and summer. So I'm actually not too concerned about this group. Similarly, another volatile group, at least in shopper confidence trend terms, are the comfortable communities. This group have ended the quarter at just +1%, that's countryside communities, have ended the quarter at just +1% here. And they started the quarter at a year high level of +7% in October. But there's been such a volatile movement in this group that I really can't see any clear trends that I can draw anything from. Finally then, starting out, they're a bit more of a concern. They've seen a considerable drop in confidence. That's the right-hand set of bars. They've dropped from +19%, their highest since records began in October, to just +2% in December. This is a worryingly 8 percentage points below where they ended 2013. Now, it's too soon to spot whether this is a trend for this group. However, starting out is dominated by young couples, starting families, and particularly is vulnerable to rising mortgage rates and job insecurity, and may be feeling particularly vulnerable to New Year uncertainty. So, back to this quarter's featured Acorn group. So what are the key features of the successful suburbs Acorn group? The name kind of says most of it. They comprise home-owning family areas, living comfortably, stable areas in suburban and semi-rural locations. They mainly live in 3 or 4 bedroom detached and semi-detached houses of an average or slightly higher value for the local area. Incomes are at least of average levels, and many earn well above the national average. People are employed in a range of occupations, including quite a lot in middle management and clerical roles. Most people in this group have some savings and will consider themselves financially prudent. That's the background. What are their shopping behaviours? Now, we have carried out about 200,000 surveys in shopping centres over the last 2 years. These, what we call shopper dimensions surveys, give us a unique insight into the consumer behaviour of each Acorn group. Now, whilst shopping centre clients signed up to the panel received much more detail, we at this level can see the following. So, what are successful suburbs consumers doing? Well, this index of 101 for spend per visit shows us that they over-index by 1% in terms of how much they spend per visit. So, in short, they spend fractionally more than the UK average consumer when they visit a shopping centre. However, they are not the most frequent of shoppers, visiting the schemes surveyed by CACI 19% less than the average consumer, showed by the 81 index. The fact that their dwell times are 4% above average at 104 implies that these successful suburbs consumers store up their shopping trips and make a day of it, rather than shopping little and often. Their reasonably high levels of spending potential and their lower than average enthusiasm for visiting shops makes them enthusiastic online shoppers, and they spend 5% more online than the typical consumer and 9% more on click and collect. So, retailers wishing to lure successful suburb shoppers into their stores would be wise to use strong click and collect options as a carrot. And similarly, landlords targeting catchments with large numbers of successful suburbs shoppers should push the food and beverage options in their retail centres, as these consumers spend 3% more time than the UK average, more money than the UK average on food and drink while shopping, presumably to help sustain them on their longer than average shopping trips. So, that's the shopping behaviours of this month's key Acorn group. But where do these consumers actually shop and spend and eat? Our shopper dimensions surveys, again based on asking them where they visited on their current trip, show these brands are strongly aligned, these brands here are aligned with the successful suburbs Acorn group. As a result, these brands are likely to benefit from the growing confidence amongst their target consumers. The brands shown on this slide have also generally seen positive press in the last quarter. For example, Holland & Barrett announced in October that it's looking to open 40 more stores in the UK. John Lewis has already reported strong Christmas trading and confirmed their plans to grow their store portfolio, which they see as essential to their omni strategy. Pets at Home are continuing to expand or are trialling out new formats, and TK Maxx likewise continue to expand, including announcing October the new flagship store in Edinburgh, which is the largest letting in the city since 2011. So these brands are closely aligned to the successful ones at the moment and are also doing well. Other fashion brands closely aligned with successful suburbs are people like Clarks, House of Fraser, Mountain Warehouse, Topshop and Zara. From a food and beverage perspective, the brands shown here are also notable in benefiting from successful suburbs. Ed's Easy Diner, one of the Sunday Times' fastest growing businesses. They hope to have a total of 50 outlets by the end of 2015 and are expanding into increasingly diverse locations. Patisserie Valerie also announced plans in November to grow their estate, and also performing well amongst this Acorn group are Nando's, who have a broad appeal, high footfall, and are seemingly ever popular with both consumers and landlords. So those are the brands who are likely to benefit from this booming confidence amongst this group. Let's just quickly also look at some significant places. As many of you will know, our retail footprint catchments can model out where these consumers are to over 4,000 retail centres. But this map here is just showing that yes, in summary, successful suburbs are, as the name suggests, found in large concentration around the edges of many of the UK's metropolitan areas, especially London, where places like Harrow, Brent Cross, Ilford and Uxbridge all have concentrations of 15% or more of their shoppers falling into this group. At a more detailed level, this simplified map shows, at a more broad level, this simplified map shows that outside of London, places like Huddersfield, Leicester, Bournemouth, Castle Point and Peterborough also have sizable concentration of this quarter's key Acorn group. But before the summary, I want to end with a cautionary tale and look back at the long-term headline trend again. The fact that it is only 2 years since we reported confidence had reached the dizzy heights of 1%, plus 1% in December 2013 after spending more than 2 years in almost entirely negative confidence territory shows just how far shopper confidence has moved on over the last 2 years. Retailers will hope that shopper confidence will follow the same growth pattern witnessed from January 2014 throughout this year. However, the last election year, 2010, should provide a cautionary tale. Shopper confidence started that year at plus 5%, and there seemed to be some confidence that the worst of the recession was over. But confidence declined in the run-up to the May 2010 elections, and then, after 3 months of flatlining, crashed for many months and moved into negative territory in October of election year, where it remained for many months. So, in 2015, with continued concern about the impact of ongoing international economic woes on the UK economy and pre-election mutterings around the need to drive down the deficit in the UK economy, it is very important that electioneering does not drive us back into following the 2010 trend rather than the more optimistic end of year outlook that I've touched on earlier. So let's summarize those points. UK shopper confidence grew by a percentage point in December to end the year 5 percentage points higher than at the end of 2013. The largest growth in shopper confidence in December was the 3 percentage point increase in confidence in the largest Acorn demographic category, comfortable communities. It's encouraging to see the strong confidence around the middle ground of UK shoppers, and it's also good to see that no significant drops have taken place amongst other categories at this demanding time of year for consumers. This should give retailers an optimistic outlook as they enter 2015, and retailers will hope that shopper confidence this year will follow the same growth pattern witnessed in 2014, where confidence grew steadily after Christmas. But let's hope that we don't see a repeat of the last election year, 2010, when we saw confidence crash into negative territory following positive signs after Christmas. Well, thank you for listening today, and thank you for any comments and questions that you've raised. We'll be logged on for a little while now, and feel free to send across any more questions. And if you would like more information either about CACI or the British Population Survey, our details are shown there. Thank you again.